Hey, good morning, everybody. Hope you are having a great week. Welcome to the Mic Drop Show, where we talk about real estate, real freedom, and real results. Hey, I'm your host, Mike Morawski, multifamily bounce back coach, investor, educator, and favorite deal sourcing, cash flow obsessed guide through the wild world of multifamily real estate. You know what? I do interviews here with 8-figure investors where we break down deals, deal flow, capital raising strategies, and war stories from the field. And there are a lot of war stories going on today. This is the show where professionals who want to go from their paycheck to portfolios and scaling those portfolios is going to get their fill, their fed. They're going to get fed here. You know, if you're feeling energy, don't forget to subscribe, smash the like button, and follow me wherever you're watching or listening from. Hey, if you've got questions, drop them in the comments this morning or DM me on your topic. It just might be the next topic on the next Mic Drop Show. We go live here every Wednesday morning. This is your weekly wealth workout. And welcome this morning. And if you're new to the show, glad that you're here. Hope somebody told you about it. You know, this morning, what we're going to do is we're going to go over 3 questions. I got a whole host of questions this past week from a bunch of listeners, and it's been really interesting, some of the questions. And, you know, we tend to pick the 3 to 4 questions that really seem to resonate right now about what's going on in the world and economically and in the environment. Before I do that, though, I want to remind you or let you know if you haven't heard about it, but this next week, I am hosting a live event in Tulsa, Oklahoma. I'm going to be doing my Walk the Deal event. We did this last year. We had a great time, great turnout. And this event is interesting, right? You know, there's been events in the past where they fill a bus. I only take 5 people with. And what we're doing on this event is a 2-day event. It'll be the 29th and 30th of May. We'll convene in Tulsa, Oklahoma. The first half day will be classroom. We're going to talk about how do we pick markets. One of the questions we're going to cover this morning, but we're going to talk about how we pick markets. We're going to go through due diligence. I'll give you my due diligence or my underwriting tool. We'll cover underwriting and how to really dig into the numbers, do a stress test on deals. We'll talk about due diligence. We're going to cover all the points that we look for. And I always say the 3 ghosts, right? Where that property was in the past, where it's at today, and where it's going to be tomorrow in the future based on how you operate it. And then we're going to talk about asset management. And I really feel today in this environment, these deals are made and broken at the asset management level. So it's important that you understand, we cover 13 to 15 topics every week on our asset management calls, everything from occupancy to net cash flow. And we want to see what's going on in between and how properties are being operated. So this is an event you might not want to miss. So we're going to do that first half day classroom. We'll have lunch, and then we're going to jump on a bus. We're going to go out. We're going to tour 2 assets. We will talk to contractors. We'll talk to on-site property management people. We're going to walk vacant units. We're going to go ahead and look at repairs and maintenance that we've been doing. We're going to inspect grounds. And we're going to just take a look at what's happening. That night we'll have dinner. It'll be a great networking. You're really going to have the opportunity to build some great relationships with other people that will be at the event. And then the next day, Friday, we are going to jump back on a bus. We're going to go out. We'll tour 3 more assets. So this will be a great event for you to get your feet wet if you're a brand new investor. If you're somebody who's been in the business for a while and you're looking to sharpen your skills, come on out and join us. But give me a call or message me, and we can get you more information about that. Hey, I'm going to dive right in here this morning. We're going to talk about the first question I got this week. This was really interesting. And the woman that asked this question, somebody I've been talking to for a while. And I'm really a market-driven investor. And I don't pick properties. I pick markets, and then we look for the property inside that market. So I always tell people, I say, hey, you could bring me a really great deal, in a bad market and we wouldn't look at it. Or you could bring me a really bad deal in a good market and we would consider it, right? Because it's all about the market. And are we in an area that's maybe a landlord friendly area, and landlord friendly state, you know? But the question really is, how do we analyze a neighborhood to tell if it's an up and coming area or not? And there are 7 or 8 different metrics that we look at about a particular market. Now, one thing I want you to remember is that you might have a market, and let's just say Tampa, Florida. Tampa, Florida is a market as a whole, right? But within Tampa, Florida, there's 15 submarkets. If you look at the city of Chicago is a market as a whole, but there's 78 submarkets in that city, in that market. So not only do you have to look at markets and follow the fundamentals or the metrics that we research and look at for those markets, but you also have to look at the submarket and break it down even further. This way you get a real read on who's there, right? Your demographics. Demographics are one of those points that we look at. And, you can control it and you can't control it. So you have to look at that market, whether or not you're going to be able to control the tenant base that you want to have in that property. But a couple of the things that we look at that are really important is population growth. If you put me in a market or show me a property in a market that does not have positive population growth, I don't care how much it is really, but I would like to see around 1%. I'm not going to look at that. Population growth is really important. So when we first went into the Tulsa market, we looked at Tulsa and we said, okay, population has grown over the last 5 years about 0.5% every year consistently. It started to kind of tell me, it's consistent, right? It's not 1% or greater, but it's consistent. I think something is happening here. So, sometimes you're throwing a dart at a dartboard, right? And you kind of have to analyze and think about what, where that might be. So what happens is we watch that trend, and the population growth just kept trending at like 0.5% a year. But then all of a sudden in 2024, it jumped 10%. Right? It went from 950,000 people to over 1,050,000. That's a 10% increase in a year, right? So something was going on in that market. Something was bubbling, and there's a lot of fundamentals. One of the other things that we look at is employment diversification. And that employment diversification, I have bought properties in markets before where there's 1 or 2 employers. If you think back 2008 when the world blew up, one of the markets that we were in was the Ohio Valley. And really in the Ohio Valley, there were 2 predominant employers at that point. You had distribution and manufacturing, light manufacturing, that they were making small car parts, right? And selling them to the big auto producers. Well, what happened when 2008 and the world turned upside down, those businesses got hit the worst. So because those businesses got hit the worst, our occupancy and our properties got affected really bad. So today I look for markets that have great employment diversification. So I'm going to just use Tulsa again as an example here. But if I look at the Tulsa market, I have aerodynamics, I have medical, I have manufacturing, I have education, I have retail, I have distribution, I have technology. So I have a multitude of employers in that market. So if one sector of the market gets hit in a recession or a downturn, I have other sectors that could excel, right? So that keeps me thinking that I'm going to be able to keep my occupancy up. So those are only a couple of the things that we look at. There's 10 or 12 things. If you want a checklist of all of the items that we do look at, DM my team or DM me, and we'll get you that checklist that we use for checking markets and seeing how markets actually perform and the fundamentals, the metrics that you want to look at in those markets. Um, the next question is kind of interesting. Again, it kind of goes along about submarkets, right? But how do you know if a neighborhood is gentrifying or just declining? You know, I think one of the best ways to see what's happening in a neighborhood is to drive that neighborhood and see what's going on. Do you have a lot of boarded up vacant properties? Do you have a lot of tall grass in the summertime? Do you have a lot of unplowed driveways in the wintertime if you're in a market that has snow? If you don't see cleanliness and you don't see upkeep and change, that market's not gentrifying. But if you see construction going on, if you see dumpsters in front of houses, if you see, contractors out there working, new construction starting to happen, maybe they're building a new building, maybe a new strip center, maybe Starbucks has come into the market. One of the big things about gentrifying is that you have businesses like Starbucks that are anchor stores in small strip centers. And they come in and when they're in a market, that Starbucks has done their research. Another one might be Walgreens, right? Or CVS. Some of these corner drugstores, when they start to go into a market, you can kind of tell that neighborhood is going to start to gentrify. But one of your biggest indicators is who else is doing things in the market. You can always go to the city. You can go to the economic development department and you can take a look at their plan for that city. What are they planning to do for that area, for that neighborhood? What do they want to see happen in that area? And maybe you have the bandwidth to be able to go in and start to help some of that gentrification. Maybe you're an early starter, right? Maybe you're a forerunner in that market. But, the gentrification, if it's not going on, will start behind you if you know that that's a market that it's going to happen in. So hope that helps. Listen, the third question, what do you think are the top markets for multifamily investing? Top markets is an interesting question. The major brokerages like Marcus Millichap and CBRE and MMG, the major brokerages in the country today publish every year and sometimes twice a year what they feel are the top markets in those areas, in those neighborhoods. And, when you take a look at the top trends over the last several years, one of the markets that really stands out is Dallas, Texas. Dallas, Texas has been in like the top 10 markets for 20 years, right? And it's moved from number 3 to number 7 or number 3 to number 8 to number 3 to number 1. And it keeps moving around, but it's stayed up there. It's been one of the big markets. If you look at what the trends are, so the trends are people are moving from markets that taxes are high, where they can move to a state that has no state income tax. So you look at places like Florida, like Texas. These are markets that people are flocking to because there's no state income tax in those markets. But top markets today, and we monitor about 40 submarkets. Hey, I have a friend in the business. He's been in the business for about 25 years, about as long as I have. And, they monitor 1,100 submarkets around the country. Okay. And so you can get data set up that will do that for you. So you can monitor population growth, job growth, household income, the metrics that you want to look at as you're monitoring those markets. But markets today that we watch are, I love the Southeast, everything from Charlotte to Dallas, that whole Southeast smile of the United States. Really like Tampa, Florida, like Atlanta. We really like Huntsville, Alabama, Northern Alabama. If you look at Dallas, Texas, and then markets in the Midwest. And I'm just talking primary markets right now. There are some sub-markets around there. Remember, markets are split up 3 ways, right? You have your primary MSA, your metropolitan service area. You have a secondary market, and then you have your tertiary market. That's that market that's out there in the cornfield. And don't be afraid of it. Those tertiary markets sometimes provide properties with strong cash flow. So just things to think about, things to look at. I hope this has been helpful for you this morning. If you have questions, if you have insights, or you want to discuss any of this a little bit more this morning, reach out to me. I'd love to talk to you. But that's a wrap for today's episode. The Mic Drop Show. I hope you're walking away this morning with a nugget, maybe a little mind shift or a straight up blueprint that can help you move forward. Listen, wealth doesn't happen by accident, does it? It happens by design, and then by the action you take around the design you create. So whether you're just getting started in the multifamily space or whether you're scaling up, leveling out, just keep showing up. You know what? It's like going to the gym every day, building that muscle, right? How many go to the gym every day, 5 days a week, work out every morning, every evening? It's building that muscle. So if this episode gave you some value, do me a solid, would you? Smash the like button, hit subscribe, and follow me, and share this with somebody who's already building a portfolio or trying to leave their paycheck. And if you have questions, if you have topics you want to discuss, you know what? DM me. I want to cover them. Or if you know somebody who'd be a great guest, I'd love to bring them on. So don't hesitate to reach out to me and send me an email. I'd love to have a conversation with them. Remember, same time every week, Wednesday morning, same energy. But until then, stay focused, stay cash flowing, and keep stacking those doors. Have a great day, everybody.